All right, here now is Scott Martin from Kingsview Asset Management. He is also a Fox News contributor. Scott, are we reacting to this right now? We see...
The reaction is, by the way, that the stock is trading way up after hours. We're still looking through the numbers.
All right, Scott, so you see it trading up. What are you looking for in this earnings report?
Yeah, it looks pretty good, Melissa. I mean, obviously, some of the cloud business numbers are going to be interesting. That's been a major growth engine for the company. And really the fact, Melissa, that I think Amazon's quarter is going to show that they can basically do whatever they want. You know, one of the funny things about Amazon, and the knock on them if there was one back in the day, and this is many quarters ago, but that was they aren't making any money. But the reality was they were spending money for future growth. And so nowadays, they could beat on the top line and not beat on the bottom line. It doesn't matter because they're investing in their future. We just saw the healthcare news come out with Amazon. That was great. I'm sure the stock's doing very well right now.
He's got fourth quarter results right now. He's going to give us some of the numbers so that we can fill in those blanks. Go ahead, Ashley.
That's right, Melissa. Well, on the EPS, that's where the confusion is. We still don't have the adjusted amount. We have a non-adjusted at $3.75 a share. But let's get to the revenue. $60.5 billion. That is a beat. Now, just going through some of the individual numbers. North American sales are right in line. International sales at $18 billion. That is up slightly more than expected. Amazon Web Services, which is the all-important cloud unit, that's coming in at $5.1 billion. That is up 45% year over year and is in line with expectations. These are very strong numbers indeed, but we're trying to get that adjusted earnings per share number for you. But overall, first blush, guys, and we're seeing it reflected in the nice push upwards on the stock after hours. Seems to be a very strong report.
Okay. Let's go back to Scott to talk about that a little bit. You know, the concern with Amazon is always that they are spending so much money as it comes in that if they ever do miss these spectacular numbers or start, you know, not performing, the stock is going to fall precipitously. Does not seem to be the case this quarter, though, for sure.
No, they got through another quarter without that happening, Melissa. And you're right. I mean, the margin of error, let's say, on the top line for them, so that's, you know, the ringing of the register, the top line revenues is thin, I'll admit. Yeah. I mean, Ashley pointed it out. You know, they did beat on the top line. I think that's why the reaction is good. You know, the EPS number to me, not that big of a deal, because like we talked about, they'll spend money to make money and they'll lose money to make more money in the future, and the market seems to deal with that. The AWS number is somewhat in line. It's actually a little higher than what a lot of as analysts were expecting, so that's good. And then also the fact, too, that if you look at just Amazon with respect to holiday sales, Melissa, those were off the charts. I mean, I myself, admittedly, I hate to say this on national TV, I bought gum on Amazon today. It took me 2 seconds to do that. Who wouldn't?
Yeah, who wouldn't? No, absolutely. Lance, I see you pouring through some of the numbers over there, looking at your phone. Tell me what's jumping out at you.
There's so many big numbers. I mean, Amazon is killing it here. They don't really get into details of like how many gadgets they sold, and you know, so it's just these numbers are super big. With $60.5 billion. AWS, of course, is the thing that is not a surprise at all to me. I saw physical stores noted in here for the second quarter, which I think is interesting. Yeah. But you know, things like the new areas like Amazon Go, where you can run in and walk out and buy stuff. That's really not going to have much of an impact. It's really about them innovating.
All right, we have breaking news on Alphabet now, which, of course, is the parent company of Google, reporting fourth quarter results. Nicole's got the numbers. Nicole, go ahead.
Okay, taking a look here at Alphabet earnings right now. So we're looking at what we're seeing here for earnings per share, and also, by the way, stock's down 4.7%. So we're looking at the earnings per share. That was a miss. Came in at $9.70 versus $9.98. Revenue, that was a beat, 32.3. So you see that the stock is down $47 for Alphabet Google, down 4%. What's interesting is something that I was looking for, and that is cost per click. The two things that we look for, particularly for Google. How many clicks and what's the cost? Obviously they want to make money on it, and that dropped 14%. The other thing too is that they had to take a write-off for taxes, as many of the companies have done. So that's another big picture. But you can see the stock down 4.4%. Back to you guys.
Yeah, Nicole, I was going to mention that miss on earnings, while they beat on revenue, would have to do with that one-time hit that they're taking based on bringing revenue back from overseas. We're seeing a lot of tech companies doing that. Let me go to David now.
Yeah, well, it's interesting, Scott, that this is the exact reverse of what we were seeing of Amazon. Amazon, of course, is one of those companies that has diversified itself into infinity. I mean, they're even getting into pharmaceuticals now, whereas Google, you think of Google and you wonder whether they have lost the ability to adapt to as many different products as Amazon has.
You know, on the surface, David, it would appear so, but I'll tell you, there's a lot of exciting things going on at Google, man. I mean, you've got Waymo, which is a self-driving car division, which is a multi-billion-dollar
lawsuit. Yeah, but investors,
with Uber,
Scott, forgive me, investors are not impressed. It's down 4% right now.
I'll agree, and I'll draw a different parallel to the opposite of Amazon, which you highlighted there, David, which is could be the Facebook scenario that we saw last night, which is the initial reaction was to sell on some of the Facebook numbers. We saw what happened today when the smoke cleared. I think the same thing could happen here with the beat on the top line once we figure out what the drag is on the bottom for Google.
All right, Lance, what do you think?
These are very different companies. So Google's, really relying on advertising revenue, and that is something that is so much in flux. When you compare this to Amazon, where they shipped 5 billion items last year, they shipped physical items. Amazon is selling stuff, and it's a great way to diversify because you can always sell more stuff. Google is selling eyeballs. Still, that's what's at the core of their business, and I think that is the thing that probably scares people the most. But obviously, and I'm not sure if they've mentioned much about it, Google's selling a lot of hardware now, and this was the first big quarter where they spent a lot of money on pushing all the Google Home services, Google Assistant, there's Google Home Max. So this was supposed to be the big holiday season for Google and hardware.
All right, let's get into some positive news here from Amazon because that stock is going up after hours. Ashley has some more news on that. Go ahead.
We're getting into this a bit more, David. They're saying that, look, there was a strong revenue surge, up 38%, thanks to a very strong holiday season. We know how popular Amazon was over the holidays. They're also saying that their sales of Alexas, although I'm still not finding hard numbers, but they say the Alexa sales far exceeded expectations. And because of that and the strong holiday season for Amazon, their revenue surged 38% in this quarter.
All right, Ashley, thank you so much. Scott, the problem with all of these companies, I think that would make me nervous as a shareholder, is the idea that you read more and more articles about them being the last bastion of really the Wild West, that they know everything about you, they know everywhere you're clicking, they know everything you own. Now they're going to know about your health care. It's not terribly regulated, and one day Washington's going to wake up to that and begin to really hamstring them the way they have the banks. I mean, for better or for worse, I think for all of these owners of these stocks, there's a real regulatory risk, and maybe that's one of the reasons you see them all trying to be nice to Trump right now. What do you think, Lance?
Oh, I mean, yes, I think right now they're in a lot of these companies are in a really weird position because they rode hard against Trump for a year prior to the tax thing, the tax changes, and now we're seeing this real impact on their earnings and what's going to happen with paying money and making more money. And so there's a very weird moment, and they do want to get into these other businesses. I mean, the push into healthcare is not just Amazon. Apple is very interested.
But
in
the more
industry.
they do, Scott, the scarier they are, and the more you would see Washington gunning for them, right?
I agree. I mean, I'd also say the flip side of that, Melissa, is the more they know, the more they do around your house, the easier they make your life, And that's kind of what the old kind of your fathers and mothers antitrust thing was, right? Was making business harder and making it more costly. And they do the exact opposite. I mean, yes, Amazon Prime is raising their prices, which is something they probably should have done a year or two ago, but they have the pricing power. And we all know Amazon Prime is probably still the best deal on the planet. It's the gateway drug to massive internet spending. There's all great things that Amazon is doing that make everybody's lives better.
All right. I'll give you both that. There you go. David, go ahead.
Okay, so